All right, guys, welcome back to the Agent Investor Podcast. I'm your host, Tom Caffarella. I got Jake Thomas joining us all the way from Michigan. Like I told Jake, my mom's from Michigan, so holds a near and dear place to my heart. How's everything going today, Jake?
That's going great. How are you doing today?
I'm always good. We talked about really quickly, our audience is real estate agents, some of whom have already investing or looking to kind of take the next step with investing, and a lot of who are just kind of getting started and know that they should be investing, but maybe haven't gotten, out of the gate yet. So I always like to start, with your investing story and how you got going and, ask you some questions from there. So if you can kind of get us caught up, like, when you got involved in real estate in general, when you started investing and all that good stuff.
So it was roughly 10 years ago. I I bought a house as soon as I possibly could out of college because I rented through college, and I was like, "This is stupid. We're paying $1,200 a month." And I know I did the math. The landlord's probably paying $600 a month in mortgage, interest, taxes. I was like, "Hey, there's money to be made there." And I didn't know anything about this before that. So I bought a house as soon as possible. I rented out all the rooms except for my own that I had. And I held that property for probably 5 years. And then I met my now wife, then girlfriend. She had also bought a house around the same time as me before we met. And she was renting out one of her rooms as well. And then we ended up moving in together. And I kept that property going for 4 or 5 years until we finally sold it to buy a duplex. And then around that time was when I got my license as well, because I was looking at lots of properties, trying to buy more. And I felt bad for the realtor that was I was dragging around, having him show me 30 plus houses for me to maybe make an offer on one or two. So I was like, I'm gonna get my license myself. And then, one thing led to another, and it turned into a career change about 5 years down the road. So
yeah, I remember those days, like looking at 30, 40 houses, calling up the agent. Oh man, that was brutal. I pretty much got my license for the same reason as you, because it's like, it's tough. It can be tough working with investors because obviously it's got to be the right deal. The numbers have got to work, and you're not going to like buy a house based on emotion. So I love the fact that you got your license. I think it took me 2 years of working with an agent. So that agent, looking back, probably doesn't remember me favorably, but it is what it is. I had to make money. So that's kind of crazy though. So you weren't even thinking, there was no thought in your head, like, I want to become a real estate investor. It was literally just a simple, like, it just makes more sense for me to own it type of thing.
correct. I never believed in renting really. So, but as soon as I was able to, I wanted to, and it worked out. I basically have never made a mortgage payment on a property other than the house that my wife and I live in now out of my own pocket. It's always been paid for by tenants for 10 plus years. So
yeah. And that, start of your story is very similar to a lot of people that end up having a lot of success in real estate. And it's one that it's tough. It's an age, I think, specific thing where like house hacking and living in the properties that you own, it's a lot easier to do when you're younger. And then, as you get older, like you have now, probably a single family that you live in, the older you get, the harder that becomes. So it's like one of those lessons that I'm going to make sure that I teach my kids, between the ages of like 18 and 23, buy a house, rent out, some rooms or rent out a multi. But so what caused you had the ones that the one you renting out the rooms. What made you go to like a duplex from the single family?
to go to a duplex in Grand Rapids, the market that I'm in, just makes sense. Get one roof and two doors basically, and I could get a higher monthly rent out of a duplex versus a single family. Then things have slowly turned in the current market. Single families are now renting for a significant amount more than they were a year and a half ago with all our rent increases and such. But then it just made sense to diversify a little bit into a multifamily. And we ended up getting into, I think, probably did 3 or 4 a year for a few years until we kind of slowed down, and then we started buying single families as well. So we have a nice mix of properties in our portfolio, and now we're starting to get into short-term rentals as well. That's kind of been our new focus over the last year or two, has been short-term rentals.
Nice.
Airbnb, VRBO style type properties. So
Nice. So, once you started, you bought the first duplex you traded, like at what point did you say like, I'm an investor or I want to be an investor and I want to build up like enough passive income to live off of?
I would say I was working on a company as I was also a realtor. I overlapped the two for 3 years. I literally sold 40 houses the last year I worked at this company, not a 9 to 5 job. My wife finally was like, you can quit. Like you work enough here. I would show houses on my lunch break. I would go video houses for my investor clients on my lunch break. After work, I'd go be working on a project. I finally got to a point where I'm just going to be focused on realtor/real estate investor. And it only took about 3 to 4 years from the beginning to really get into it. And I would call myself a real estate professional these days. I'm still a realtor. My wife is actually a realtor as well, but I really focus more on our portfolio and our investments than being a realtor these days. I still help mostly investors. That's pretty much the core of my clients as investors these days. I prefer to work with them. It's nice to have one client that buys multiple houses per year versus working hard for one client that moves every 7 to 10 years. So,
Well, you made an interesting statement that I want to kind of ask you about. You said you're not really, doing much as an agent. And then about 2 minutes before that, you said you sold 40 houses while you were working full time. So you may not know this. Do you know how many houses the average agent sells?
was it 12 to 18 or something a year?
No, it's like 4 to 6. And
okay.
It's crazy. So my question to you, and are you still doing a good amount of volume, like over 20 a year at this point?
Yeah. My wife and I do roughly 80 houses a year,
Wow.
60 to 80, depending on, and it's just, there's the two of us. And then we have one person under our team. And then my younger brother is joining our team as well here in the next month. So I'm going to start giving him some leads. So yeah.
This is about the most humble, like top producing team that I've come across. So it's crazy because like you see, like I scroll down my news feed all the time. I've got tons of real estate agents in there, and you get people that are selling like 6 houses a year, saying that they're the number one agent in a town. So to be doing 80 between two people and maybe somebody else, and maybe you're going to add somebody else, is phenomenal. And it sounds like you're not even necessarily 1,000% focused on being an agent. So for the people that are agents that are sitting there, they're having a tough time selling 10 or 15 houses, what would you say to them? Like, what is your secret to success on doing so much darn volume without like really putting a lot of effort into it?
I would suggest that really it's, pounding the pavement, really getting out there, talking to people on the phone, just networking, really just hustle is kind of what I always say. My wife and I, we work probably from 8 a.m. till, honestly, I think last week she was negotiating a deal at 11:30 at night. Had a hot deal going. We're always working. We're always working. Our friends know that we're always working, and we always work hard. We're finally starting to get old enough with kids that we're slowing down and bringing people on our team to help take over. But really, it's we don't spend any money on marketing either. We only finally got a website 3 years ago, so it's not about marketing. You have to go to Zillow and spend a bunch of money, getting leads and whatever and whatnot. Our leads are all 100% organic, referral based, and we do a really good job for our clients. And we do a really good job for one client has led to, can you sell my mother's house now? And then the mom's like, I want you to help me sell my friend's house. And then it just branches out, and one good transaction could lead to 20 over the next 2 to 3 years. That's really how we've grown from, to where we are today. So,
well, one thing that you said kind of, you're not really that focused on it. And I believe that, but then at the same time, the hours you're working, you may still be putting in 30 or 40 as an agent, right?
Oh yeah, I still am very focused on it. I had a call right before here. I still like being an agent, but
yeah,
I've been doing more flips and rehabs for our rental properties and our short-term stuff in the last 12 months than realtor stuff. I would say my time is starting to go back towards that, but I'd still always be a realtor. I enjoy it. So
Yeah, and you're like the perfect case study. So you've had success kind of in both, right? Um, what is making you say right now, like, okay, yeah, I sell a lot of homes. I'm sure that if you put time, effort, and energy, you could do more than 80, right? If that's what you were focused on and you said, I'm going to give up the investing. But you're sitting here saying, that the energy I'm going to put in and what I'm focused on is the investing. And this is one thing I always try to, tell agents, say, I'm curious what your perspective on it is. But if you can make so much money as an agent, why are you shifting your focus towards investing?
because the passive income from the investing is now outpaced the realtor income. So you get to a point where you don't need the realtor income anymore to grow your portfolio. We're growing it with our own money and powering our own flips. Like we don't borrow money from anybody for any of our own projects. I do have a couple partners on a couple things that's just new recently, but really we're really self-funded in all of our projects. And that's just kind of like, I don't know, that's just kind of what my focus has been here. And it's just, that's just kind of how it's turned out to be the last 6 to 12 months.
So how long did it, like, how many years did it take you to build up a portfolio that was big enough so that that portfolio income exceeded the realtor income?
7 years. I actually saw a picture of my wife and I in front of the first rental that we ever bought together, which is literally a quarter mile down the street from my own house. I drive by it every day. 7 years ago, we had a picture, and that was our first one together. So from 7 years, we went from basically, we'll call it that one unit because we sold our other properties before that, to 24 or 5 units right now, I think is what it is. So that's our current portfolio. And we do 5 to 10 flips a year. So
yeah. So like, another thing that is inherent in that is like, this stuff doesn't happen overnight. So 7 years, it's not that long. I mean, I'm going to be 40 in July. So 7 years to start, every 7 years is going by faster now, but it's still a good amount of time. And I think one thing that sometimes people think is like, people like you they have this instant kind of success where it's like, okay, I want to earn enough passive income to pay all my bills and all that good stuff. When it took 7 years, and my assumption, and you can correct me if I'm wrong, was there was a lot of hard work during those 7 years, right?
Yes, a lot of hard work, a lot of sacrifices that we made, a lot of vacations that we didn't go on with friends because we chose to stay and work on our properties. But now we can hang out at home with our kids on a Tuesday afternoon, work in our garden, and everybody else is at work 9 to 5 at an office, not liking it. So that's kind of, my wife and I chose that we were going to work hard, through these first 10, 15 years, and then be able to relax later down the road. But now to a point where it's not really a job anymore. I kind of really like working in real estate in general. So it's kind of fun. That's my passion. So
yeah. So when I first started, I didn't know anything. I wanted to become a millionaire. I wanted to become financially successful. I went to this like a monthly RIA meeting, and the guy who teaches it, who still teaches it now, like almost 20 years later, he said something that has literally stuck with me to this day. And what he said is exactly what you just said. He said, work 10 years like nobody else is willing to live the rest of your life like nobody else can. And that's pretty much in a nutshell. I mean, you said 7 years, but there were some years before that, right, that were tacked on that you were kind of still in real estate. So in that window of 10 years to get from point A to point B.
Yeah, roughly 10 years. The first property I had, I owned it for 3-4 years, and it was just the only rental I had for the first 3 or 4 years. And then it went 1 to 2, and then the next year was 2 to 5, and then 5 to 10, and then 5 to 15, and then it slowed down. I would say we haven't acquired as many in the last couple of years. We've been trading. We've been doing a lot more like 1031 exchanges, trading one property and buying two or things like that. Mm-hmm. So we've been kind of trading up and not really gaining units, but getting higher cash flowing units. Yeah. That's kind of what we've been doing, trading. We don't need any more units. We just really just get the cash flow increase that way. So
yeah. And I love this because it's really so simple. And a lot of times, like when I talk to people about, buying multifamily or building up a passive income portfolio or becoming financially free, they think you need like 1,000 units. And when I asked you the question, I had no idea what the response was going to be. But under 30 units, having more income coming in from that business than from your agent business, and you're selling a lot of houses. So that's phenomenal. And for most people, that's the goal, right? So if you're an agent, you got into this because you love real estate, but you are working all hours of the day. Like you said, you got offers going in at 11:30, or you're working every Sunday, open houses. And for a lot of agents, they don't have any sort of like retirement plan. It's just like work until I can't work anymore. And the thing about like the number of units that you have, that is just something, for everybody to think about, is like, where are those rents going to go over the next 10 years? And then where's your mortgage going to go over the next 10 years? So rents are only going to increase. So whatever you have now coming in for passive income is going to increase. And then you're making little tweaks along the way by just trading houses. Okay, I sell this one, I buy this one, I'm going to get a couple hundred or whatever amount more per month. So you are able to work when you want. You just said like, so how old are your kids?
2 and 3.
2 and 3. Okay. So they need a lot of attention. You and your wife are both in real estate, right? You guys are around, able to kind of, be with them and all that good stuff. So you've already kind of achieved like the step one of the financial freedom part. So where are you and your wife's head at right now? Like there's got to be some plan to say, hey, this is where we want to be in like 5 or 10 years. Or have you gotten to the point where you're like, okay, we just want to make like minor tweaks because we're happy?
Yeah. I don't think the plan is to ever get out of real estate and just do nothing, but we're happy where we are now, but we like to change the path. Like we started with multifamilies and then we mixed in single families. Now we're getting in, like I said, the short-term rental game. We actually really enjoy managing our short-term rentals, and our guests, they're always so happy with staying at the lake houses that they rent. And I think it's just more of a change of path that we're going down versus what we had been doing. We'll continue being realtors. My she still likes to focus on like our retail clients, and like I said, I work with mostly the investors, and we kind of enjoy doing it. It's fun. It lets us have a flexible schedule, and we both work from home. We don't have an office. I'm in my home office, which I'm actually rarely in. I usually just work from my phone and my laptop and my kitchen dining room table, but I don't tell my clients that. But that's usually how we operate, and that's kind of our plan. Is the kids going to school, maybe we'll focus on a few other things. But I don't know. We haven't really talked too far out into the future. We're kind of just at ages 3 and 2. We're kind of in survival mode here at home.
Yep.
So that's kind of where we are now. But it's still fun. We very much enjoy it. So.
No, trust me, I know that. I have a 9-year-old daughter, a 5-year-old son, a 4-year-old son, and a 2-year-old son.
Okay.
So
all right, got me beat. So
we're kind of just getting out of it. We got the oldest 3 in school now. So, so you talked about a shift towards the short-term rentals and really enjoying it. And I think one big decision for anybody that's investing in real estate, because people, think in their head, okay, I'm investing in real estate, but what asset class are you going to be in? What location are you going to be in? Are you going to be doing like, you're going to be buying condos? Are you going to be buying apartment buildings? Are you going to be doing vacations? What made you decide to give the vacation thing a shot? And then what do you view as the pros to it that you like enough to say, like, I want to do more of this?
So I'll start the answer with a kind of a long-winded story. It really started with, I bought a house for $26,000 and I was driving for dollars. Drove by this house several times, found the owner, contacted them, made them an offer, closed on it, bought it, rehabbed it, sold it, and I 1031 exchanged it to another property, did that a year later. And then I found this I actually got a lead from an attorney. I get leads from random places because I refuse to spend money on marketing. This attorney said, hey, this couple is getting a divorce. I know this attorney very well. He's like, they need to sell their house. So it was on this lake south of Grand Rapids a little bit. It's a very big, popular lake. And I went there, met with them, houses, and it needed a lot of work. It probably would never have qualified for a traditional financing. So it was going to be more of a cash only type deal. and made him an offer. And, hey, honey, we bought a lake house. So, and it kind of turned into the first year we rented it a couple weeks, and it was like, okay, this isn't too bad. And then the next year we really hit it hard, and the income blew us away. It was triple what I thought it was going to be.
Yeah.
And really it was just like, okay, it's not passive at all. I mean, you can be passive, but it's more active. It's 15 minutes from our house. It gives me a good excuse to go to the lake and take the boat out, to be honest. But now the income is so great from it that we really are focused on it. So we've bought 2 other ones since, and that's kind of what we're looking at, another one on the same lake, and then also starting to look at other states as well for this, because it's kind of become I've noticed it's becoming the new hot thing to go into. And I've as a realtor, I've actually been selling quite a few more of these properties. And we actually just I did a flip that was purposely, it was on the same lake. I remodeled the house exactly how my other ones remodeled, because we had great success with it. And we sold turnkey, literally dishes in the cabinets, everything, sheets on the beds. It was ready to go. So the guy bought it. He just hit the ground running, and it worked out for us. It was a better flip for us than holding as a rental, but that's kind of been our new path on that. So it's working out. We really like it.
So one thing, I want to interject with just some of my experience with passive income. Like when I read the book Rich Dad Poor Dad, I bet you've read that book too, right? At some point.
Yep. Oh yeah.
Yep. So you read this book, and you get an idea that you want to buy assets, real estate being one of the assets, and then you find great management for it, and then you kind of like close your eyes and kind of get mailbox money. And one thing that you said was related to the fact that like the vacation rentals aren't that passive. But one thing that I think is kind of important, especially for people just starting out, is like getting truly passive income. Completely passive is tough unless you're investing in somebody else's deal or like somebody else's company, like the stock market. So I'm sure with other rentals that you've had, even though they, people paying you, monthly versus, weekly, you still deal with problems. And even if you have a property manager, you're managing that person, and things go wrong and you're the owner, so that, they have to go to you. So the reason I say that is because like, I just want to make sure that people, if they thought the same thing I did, because I really truly thought this, you buy a multi, you find the perfect manager, and then you just like get money in your mailbox every day. It's a little bit harder than that. So for the vacation rental type of stuff, it's probably just a little bit more than what an average rental would be. But the average rental still typically isn't completely passive until you get to a certain point.
Yeah. Yes, exactly. The average rental is definitely still work. I get emails from our property management company every day about problems, and then there's turnover, and then you have to deal with, are you going to hire them, or am I going to hire my own people to take care of it? And then the short-term rentals as well. Once you build a great team on the short-term stuff, you have a cleaning person that's really good and knows what they're doing. You have like a handyman that can help take care of things. That really helps. That takes a lot of the stress off and allows us to grow and continue getting more. So, I would say building that great team is probably more important than anything else, because without the cleaning person, I couldn't handle it. We couldn't do it. So it's too much work at all. So, and then the same thing with the month to month. A good property manager will help the month to month ones, but it's definitely not truly passive. There's always work involved. A lot of my clients I've never even met. They're all from West Coast, East Coast, and they invest in my market because it's very affordable to invest in. And I try to make it as passive for them as possible. And it must work out because they keep coming back and buying more. But even for the ones that live in, far away, that have never seen a property that they've bought for me, it still work for them, because they'll still reach out to me and ask me questions that the property manager is asking them. So it's never going to be truly, truly passive, but we could try to make it as passive as possible and, go from there.
So another thing that I think is important, we've got listeners, in all different parts of the country. And I think every market's different, and every market has like its pros and cons. So I'm in Boston, which is a market that's kind of tough to cash flow in, East Coast, West Coast, you're talking about big prices, harder to cash flow, all that good stuff. If we flip a house, we'll make $100,000, where some of your prices might be $100,000, maybe not anymore. But so every market kind of has these like pros and cons to them. And so what I want to highlight there is just that you took advantage of something that your market has, which is lower price, cash flow inventory. What percentage of your clients are from out of state?
Probably 75+%. I try to honestly work with mostly out of state investors.
Yeah, so that's phenomenal. And again, so like anytime that somebody says, hey, I sell 80 houses a year, 40 yourself and 40 with your wife, like, there's always something that they're doing that's smart. That's what I typically find, right? Because you can grind, and it could be hard for you to sell 8 houses. And we can watch what you do every day, and you're really putting in time, effort, and energy. But what Jake did is he did something really smart, which he knew he's got this thing in his market that's going to attract and be really good for people at both coasts, basically expensive areas. Like, what's the average purchase price that you're putting somebody in?
Today, in this current market, $250 for a mid-level multifamily, up to $350 range. So we will say $250.
And on a $250 property, what's the rents?
Right around 1%. So 24 to 2,700 range. So yeah. So
again, I want to highlight that point, right? If you call the 1% rule. So real easy shortcut. It's like the easiest shortcut you can ever do. There's a property cash flow. You take the price, multiply it by 1%. The rents have to at least be that high. And so his market still has that 1% rule. Our markets get like the 0.5% rule. So Boston, California, like all these places, it's tough to do it. So you have this like niche where people on the coast have a ton of equity, they make more money, and they can invest. So my question then is, you have this thing, you have it, you're helping other people do it. How are they finding you?
So when I first started, Bigger Pockets would be where I would post a lot of blog posts on there and reply to people. And then I haven't really been active on there in a few years, but I still get emails weekly from my old posts, just little old blog posts, just responses. That's how I started. And then referrals. I literally help one gal in New York, and she had such great success with the properties I was selling her that she's referred me to 5 of her friends. Yeah. That's just that side. And the other side, the same thing. It's referral after you help. And then I have quite a large buyers list now. So when I come across an off-market property, I can email it to 3 people and it's sold. I don't even have to worry about listing it, because multifamily properties are not really the easiest thing to list and sell if there's tenants in it. Sometimes it's easier just to sell it off market if the seller is okay with that. So that's really how we do it now. We've had such a strong buyers list, and that's how most people find me. And also listings, I've heard a saying once that listing agents last or something like that. And it's true, because listings lead to more listings as well. They'll lead to buyers all day, but buyers are not hard to come by. But it's the listings that, if you can get listings, that'll keep you going in the long run. And then I'll have people just reach out to me and say, hey, I see you have this unique listing, and they'll want to come either directly buy it from me, or that conversation will get started and they might end up buying another property through me down the road. So that's really how it is. It just kind of just build a network and just chat with people, kind of leave them. I have explained Grand Rapids, the market and the city, to so many people, just explaining, hey, this is what the market's like. Because, hey, if I'm going to spend hundreds of thousands of dollars there, I want to make sure it's not, it's a good city to invest in. And it really has been. It's turned out to be a great place for most of my clients. They're really, really happy. I would say of all the properties I've sold, less than 2% I have resold to those clients because they weren't happy with it. Yeah. So I really don't. Maybe it's a bad thing for me down the long run, but they're so happy with the properties they don't want to resell them. So so it's working out for them. So and I think
you're saying it very casually, nonchalant, like you didn't really do anything, but you built a funnel, right? Without maybe I don't know, maybe you did put a lot of effort into it, and you're not letting on to it. or maybe it was just small, right? But no matter what, right, you found an audience. Bigger Pockets is one of the biggest platforms for investors. Obviously, when you're doing anything, you need to be in front of as many people as you can. Bigger Pockets has a pretty big audience, but there's other places that have other big, audiences, Facebook groups and the like. And he provided value. That's another thing that as an agent, like I always want to be thinking about, like, how can I provide value to somebody that they can't just get from somebody else, right? So you became an expert in that market. You helped to solve an economic problem, which is, hey, the person in Los Angeles just read Rich Dad Poor Dad. They just looked at 10 houses and they're going to lose $1,000 a month on any of them, right? So you solve that problem. You help people get in at a low barrier to entry. The cash flows on day one. You're the boots on the ground. You obviously earn their trust, and now they're repeating, right? So it's a funnel. I mean, it's a great funnel. And again, at this point, you're getting referrals, and you're not even trying to push that part of your business anymore. So you almost have like passive income. I know that's not ever going to. No agent income is ever passive, but that's almost like a little passive funnel because you're not really super lead generating. You set up something, it's producing, it's like a little passive kind of thing. Then you've got your passive income on top of it. And no, it's just awesome. And then the short-term rentals. So let me ask you, I know I'm switching gears completely, but on the short-term rentals, because I've never done one. So I own apartments, I own multifamilies, I flip a ton of houses, I got a big brokerage. I've done a lot of cool things in real estate, but never owned a short-term rental. The thing that makes me the most nervous about short-term rentals, and I'm curious about your position on this, is the regulations. My concern is that I invest in a bunch of these, and then a town or a city or a state says, hey, because you're not registered as a hotel, or the hotel industry or somebody lobbies, and all of a sudden it gets shut down. So what would you say to somebody that's like has the same concern that I have?
Well, first thing is do your research before you buy. I mean, that's like rule number one. You do your due diligence. For example, the township that the properties we own are located in, it's a $100 per year application fee, and basically you fill out this form and that's it really for that. I'm not worried about those townships changing. There are some that are restrictive, mostly on like the west coast of Michigan, on the coast of Lake Michigan. There's some of those cities will regulate things, but really I would say I believe Michigan's also, don't quote me, I don't follow this much. They're likely going to pass a law this fall that says the state can't regulate that at all. No township can regulate it, and they'll be allowed everywhere. So Grand Rapids, there's a big people talk about it. The city says you can't do it, but people still do it anyways, and nobody really enforces it. So it's a risk like anything else.
Yep.
But with the properties that are on a lake, even if for some reason 10 years on the road they change things, I still own a property on a lake that is worth more money tthan I likely paid for it, because that's how real estate usually works. So
yeah,
that's worst case. I can always sell a property. Whenever I buy a property, or whenever I analyze a property, I look at it, what can I sell it for as is? What can I sell for after I rehab it? What does it rent for? I have multiple exit strategies whenever I look at a property. I never buy a property just for one purpose. It has potentially, because I bought properties to flip, and then I'm halfway through, I'm like, we're going to keep them as a rental.
Yeah.
Because something happens, something changes. You don't know what's going to happen. They're going to build a big shopping mall or some facility, a block behind me, and the rents are going to be quadruple what I planned on. So we're keeping it, something like that. So
yeah, I know. And I've heard similar things from other people, and that part of it makes sense to me, because if you're buying an asset on the water or in the mountain, you're buying a
vacation property. Yeah,
you're buying a really nice house. So even if you can't rent it, it's going to be some of the most in-demand real estate that there is, because if somebody wants to vacation there, then it's nice. So yeah, I've heard that one. I just I haven't taken the leap myself. We'll see if I get the courage.
Plus, you're allowed 2 weeks a year to use your own property. So per the tax code, I believe. So you can take the family there and work on the property for 2 weeks.
Yep.
I've maybe stayed 3 nights at our own properties because they're so rented. There's really not a free night to ever stay there, but
Yeah.
that's so. But if you want to, you can. It's kind of nice to use. It's just a nice little thing you can do. But I would say try it if you want to. It's worth the risk. So
yeah, it's really just like an interesting. It's a huge shift. It's a huge change because obviously, like I've got 4 kids, and there's really not too many hotels, even if they've got like big rooms that are really that comfortable, especially for smaller kids and things like that. And you get entire houses for a lot of times less money. So it's just has completely changed, travel. And I'm definitely curious as to like how this kind of continues on in the next like 5 to 10 years. But to kind of wrap, so obviously we've talked about a lot of different things. What's the best piece of advice you would give to an agent that has been working with a bunch of clients like you and your wife and knows they should invest? They know your story. They know, hey, like eventually someday I can have passive income that exceeds my active income, but they still haven't done it yet. Like, what's the biggest piece of advice you would give them?
Go buy something as soon as possible. Don't wait any longer, because I call it analysis paralysis. I have clients that they've been analyzing properties for 4 years and they've yet to buy one, but they would have bought that property 4 years ago. It's worth 3 times and the rent's gone up 3. You know what I mean? Don't wait. If you think it's a good deal, it's a good deal. And as a realtor, you're the first person to see that property. People call you. The house has been on the market for 40 years. You look at it like, and you have the inside scoop on the property.
Right.
Why not take advantage of that? So I would say, don't wait, jump into it. If you have questions, there's always people that answer those questions for you if you know who to ask. So I would just say, don't wait, jump into it, get going. That's kind of what we did, and it's worked out. And it usually, once you get going, it kind of snowballs if you figure it out, and it'll just kind of figure itself out from there. So
yeah, that's the weird thing. Is like everything else in life, right? You never rode a bike before. You're scared to ride a bike. You get on the bike, and all of a sudden, 2 weeks from now, you're trying to do tricks on your bike. You don't want to just riding anymore because that's not even fun. And that's the same thing, with investing. It's like you start off small. Maybe you only think I want one property, and then all of a sudden you keep going. But it's that initial, point of getting off the getting on the horse and doing it. And the thing about like passive income real estate that's so much different than like flipping. I do a lot of flipping, and I know you talked about flipping, but buy and hold is always going to look good with enough time. Like even if you bought not the ideal asset or you overpaid a little bit, it's always going to look really good with a long-term horizon. And really with all of these, passive income investments, you need to have a fairly long-term horizon anyways. So whether the market's going up, down, or sideways. And the other thing that I hear sometimes is like people trying to time the market. But the problem with that is, okay, it's the downturn. How many can you buy? Well, I can only buy one. Okay. Well, by the time you buy one, get it rented out, now you're done. Right. So like you got to get the skills to be able to acquire, be able to raise money or refi and do all the stuff that you've done. So, but, I want to thank you for coming on. Are you still taking clients in that area that want to buy? Because there could be listeners that are on there, like have been looking in markets like mine that have had a tough time. Are you still looking for investors to work with?
Yes, we are. We're still taking on clients. I'm always here to answer questions, more technical stuff, more the strategy type questions. But like I said, I have a couple buying agents that are also investors. I've sold them their first duplex, a house hack in. So they're all, I really only would hire somebody that's also an investor. So that way they know what my clients are also going to be looking for. So we're always going to be taking on new clients. So yeah.
Yeah. I don't know that it necessarily has to be you. I think it's more somebody's listening to the podcast. They're in a market like mine. They're having a tough time trying to cash flow, and they hear the numbers you're talking about, and you providing them with a safe investment at a low. We think it's low on the coast, mid 200s, up to 300 purchase price. So, what's the best way that someone can reach out to somebody on your team if they want to learn more about the Grand Rapids market?
Our website ThomasTeamProperties.com. That'll have my email in there. Probably an easier email to reach me at is jakethomas26@gmail.com. That's probably the easiest way to reach out to me as well. That's all the team members are on the website. So if you have any questions, I always love helping other investors. If you have any questions, feel free to reach out.
Yeah.
So.
No, there's been a ton of people that have done what you've done in these various like lower price markets. And I'm envious of you because I wish the things I love about my market, I love, but that's one thing I don't love about my market is that like we go up and down so quick that when it's a good time to buy, it's a great time to buy. When it goes up, it's much harder. But cool. So I know you're busy, not only with your business, but with your kids and your wife. So I appreciate you taking the time on the show. And guys, we'll be back with another episode of the Asian Investor Podcast next week. Thank you all for tuning in.
Thank you. Thanks for having me.